What's up, guys? Want to make a quick video going over Bitcoin, its recent price action. Everything's kind of in a downtrend, a little bit of a tailspin right now. And I want to go over how I saw it coming in a sense, the strategy I was looking at, and just show you kind of how I laid it out, how I got to this point. So just to show proof, I posted this a little bit later than I actually entered it, but I entered about this arrow right here, but this was in a Discord chat, Kick It with Kaz, and I entered right about that arrow, and my profit target was 58.8K, which, if you look on the chart, it did hit. So what I want to do is just show you how I got to that point. I want to show you how I came to this conclusion, so you can be prepared, or you can kind of see it coming. So I'm going to actually just wipe the chart clean. I'm on a 4-hour candle chart right now, and I'm just going to go from the start. So this is using rec proof strategy. Definitely learned a lot of my stuff from him, majority of my stuff from him. He's a great teacher. A lot of free alpha that he gives away. He honestly deserves, as much credit as he gets, if not more. Great guy. So starting with this, using his strategy in a sense, you take the range, you take the high and the low of where the price action is going. So right now you have a low and a high, and then you have confirmation of this range structure being at the bottom right there. So you take those and then you get your range. So know that with a range, there's people that place their stop losses within common areas of highs and lows. So with that being said, you have a decent amount of people probably placing their shorts, placing their stop losses up here. Same thing with the longs, they probably have their stop losses down here. Now price action is attracted to those highs and those lows to wipe them because they want the liquidity. That's just the name of the game. That's how it goes. So the average person will put their stuff here, but majority of the time they'll get wiped down the top or bottom. So you placing this range will kind of give you your areas of where price action will most likely head towards. And most likely if you have, let's say sweeps the lows first, then you have, sweeps the highs later, and vice versa. So with this price action right here, we actually had the high being swept out. We actually had all-time highs for Bitcoin, but we had this range high swept right here. We had some consolidation and then breakout to all-time highs. Sadly did not hit 69,420. Definitely in the future, but not right now. So after that, you can kind of see it breaking down here. You have this somewhat downtrend, and you get a high right here. You get a high at this point in the structure. Now you can use that. You can see that this might be a possible reversal point. I mean, it's at the top of the range as well, so you're just going to keep an eye on that. So looking at this, you have a huge downwicking candle, 4% in 4 hours is pretty insane. You have downtrend, wipe some of these lows, and then uptrend right up to here. Now it uses this high as resistance, this previous high as resistance, showing that it most likely will reject that area once again. Now you can also look at a thing called breaker, where the way I kind of do it is I take an inside candle and mark it out. I'm probably off. Take an inside candle, take a candle with a lot of basically a reversal candle in a sense, and mark that out, and use that also as an idea of if it's going to reverse or not. It would reverse right here. So you take that high, you take that reversal, you see the price action consolidates, you make constant lower lows, lower highs. You can see that most likely price is going to go back to where it is needed, which is here and here. Now, how do I know, or how do I think I know that it's going to go here? I can see that because there's obviously longs placing their stop losses here, but you also have another thing called fair value gap, and that's this right here. So if you look at it, a little high. If you look at this area right here, there's not a lot of price action. Price kind of just picked up and left. You could see there's not much filled in. There's not much price action really, in that area. There's not much demand. There's not much supply. It's nothing. And the way rec proof describes it is that it will most likely be drawn back to fill in this gap. So we have, you know, these common support areas, and we also have this fair value gap that most likely needs to get filled in. We have this rejection of this high. We have this rejection of this, you know, demand area. No retries. You know, lower highs, lower lows. Most likely that's a sign that it's going to go back and it's going to revert down to these areas and fill in these gaps. So using that notion, you could have filled in, enter this trade, you know, let's say a little bit off of rejection of this supply zone and gone down, let's just say, just put it at the bottom of the range. So using that, you would have had a 2.8 R, which is a pretty nice return, risk to reward. So yeah, that kind of explains it right there. So using the range, using your, you know, structure breaks, using your swing points, seeing where those breaks are, seeing where the liquidity is, being, you know, at this point and at these 2 points down here, you can see where the possible targets are within the range, and using the information given, like your equal highs, like your demand zones or supply zones, using these two notions, could have came to the conclusion that Bitcoin would have retraced whatever odd 6% from there. And say that this can really be looked at either way. So obviously this is a bearish case scenario, but you can also look at it as a bullish case scenario. If you have, you know, a low that's being swept, you have some, you know, some price action to the upside, you have a retest of this range or of this, you know, equal low, then sends back up, you know, to all this fair value gap, these, you know, resistance areas that probably have a lot of shorts with their stop losses. You can use that, you know, and look at it in a bullish case scenario as well. This is just a chart that RecProof made. It's a little like line graph to kind of give you an idea of how this kind of strategy comes to be. I thought I'd show it. I thought it's very informative. So just to kind of give you, you know, a nice little overhead. You know, you have a low, you have a high, you have your range formed. Then you have a sweep of the formation with a nice little market structure. You have your supply being, retested, and then you eventually have that wipe of the range low, and vice versa for a bullish case scenario as well. So just a good thing to keep in mind. I'll definitely leave this this link, this little JPEG, in the description of the video if you want to just print it out, leave it on your wall, whatever the case is, so you can, watch out and make sure, paying attention whenever this next, whenever this comes back up again in whatever formation. So thank you guys for watching. Follow me on Twitter at @DecisiveDumbass. I'll be starting to post my trades, things I'm confident in, things like that, and hopefully as time goes on I can build a nice little rapport with you guys and help whoever I can out. Let me know if you guys have any questions. Let me know if I got anything wrong. I love to be wrong so I can be less wrong in the future. And yeah, thanks for watching. Peace.